This video is for educational purposes only and strategies that I use in my personal portfolio. Nothing in this video guarantees profits or future performance. If you step away from your screen or skip even 30 seconds of this video, you are voluntarily choosing to miss out on the most aggressive, highly profitable market that we will likely see for the rest of 2026. The institutional algorithms have officially shifted, and right now as you watch this, unprecedented dark pool liquidity is quietly positioning into 4 specific stocks that are setting up for a massive multi-100% run potentially. If you're sitting on cash or holding the wrong legacy assets, you are watching your purchasing power melt away while the biggest wealth transfer in human history unfolds right before your eyes. Welcome back to the channel, everyone. If you're new here, I am Corey. This is Invest with Corey. I have over 10 years experience, worked for a hedge fund, and over the past 4 years, I have taught over 3,300 students that I've personally coached in my Discord and helping active students become traders and build financial freedom fortresses and helping create multiple self-made millionaires inside my private Discord community. I don't gamble. I track institutional footprints, dark pool orders, and real structural data so that you don't get wiped out in these choppy, volatile markets. Now, before we jump into the 4 stocks in this video specifically, remember no more than 5 to 10% of your portfolio in any one stock. Do your own due diligence. Make sure the stocks I talk about fit your own personal goals and needs, as the stock market is very risky and volatile. There's no guarantees. Protect your capital, be safe, and patient in this market. Before we dive into these stocks, mark your calendar right now. My Masterclass webinar is officially returning this Saturday at 2 p.m. Eastern, 11 a.m. Pacific. You do not want to miss hanging out with me live. I'm going to be opening up the floor for a live Q&A, but more importantly, I'm going to be handing you a life-changing opportunity. I'll be revealing my exact proprietary institutional frameworks that grew my micro challenge account from $900 to over $9,000 and scaled my smaller portfolio from $250,000 to over $2.1 million. I'm going to be teaching my raw dark pool and hedge fund strategies, my AVP, D stochastics RSI, my D Fibonacci, and my squeeze RSI indicators. Every single student who has ever attended my masterclass has told me they've learned more actionable, profitable information in just 1 hour with me than years spent researching elsewhere on the internet. Space is strictly limited, so click the link in the information box below before the spots fill up. This year is likely going to be a good year as we progress through the summer and into midterms. You don't want to miss out on this opportunity. I have a lot of things I want to share with you and teach you in this webinar to take advantage of the volatility gift that we have in the market right now. Like I said, spots are very limited. Click the link in the information box below to register and secure your spot at my Masterclass webinar. Look forward to seeing you all there. Let's look at the macro layout right now because context is everything. We are navigating a complex economic landscape. Geopolitical tensions across the globe are keeping oil prices volatile, while domestic economic reports like our recent ISM Services PMI are holding firm above 54%, and cooling prices paid indexes show that underlying inflation is stabilizing. The market is currently caught in a tug of war between high interest rate pressures and massive institutional rotation. When headlines cause panic and retail investors panic sell their positions, hedge funds step into the dark pools and aggressively buy the blood, which is what I teach my students in the Discord. Buying the blood isn't blindly catching falling knives. It's about knowing exactly where the institutional order blocks are sitting. These stocks are also offering some generational structure and entries right now. Let's dive right in and talk about the number 4 stock right now that I've been actively adding to my portfolio, Applied Digital, APLD. Applied Digital designs, builds, and operates next generational high density data center infrastructure specifically engineered for artificial intelligence workloads and high performance computing as well, HPC. As tech giants run out of physical server capacity and power grid access, Applied Digital provides the foundational digital real estate required to keep AI models running. Technically, Applied Digital has undergone an aggressive shakeout, washing out weak retail hands. As of today, the stock has established a concrete structural floor between $24 to $27, where it continues to bounce over and over again. Institutional buyers have repeatedly defended this zone, creating a spring-loaded base just below the current trading levels. Wall Street analysts hold a strong consensus buy in Applied Digital. The 1-year price target is between $35 to $45. 1 to 3-year price target is between $55 to $65, and 3 to 5 years are as high as $80 to $100. This is all happening as the new gigawatt capacity comes online, and while Applied Digital's current free cash flow remains negative due to heavy infrastructure capex, its remaining performance obligations RPO and revenue guidance are surging over 180% year over year. They have beaten earnings estimates 3 out of the last 4 quarters. With major hyperscaler lease agreements actively locking in long-term revenue, this is a prime buy the blood infrastructure play right now. Moving on to the number 3 stock in this video is Oracle, ORCL. Oracle is an enterprise cloud and database titan that has transformed itself into a dominant infrastructure provider for AI compute. Through Oracle Cloud Infrastructure, OCI, they supply ultra-fast, bare metal servers designed to train massive LLMs for industry leaders, including OpenAI. Recently, Oracle experienced an overdone sell-off driven by broader tech rotation and credit concerns over their data center expansion debt. However, from a technical perspective, the stock has hit a rock-solid structural floor at $120 to $125. This zone represents a 17x forward PE ratio compression, a historic institutional accumulation area. Not to mention, just yesterday, a new deal for Oracle came through with the Pentagon. This contract is with the Department of Defense for 10 years, and it's $7 billion. Wall Street analysts view this dip as an extraordinary value disconnect. The one-year price target on Oracle is between $160 and $180. 1 to 3 years is $210 to $240, and 3 to 5 years is $260 to $350. These are where analysts are putting Oracle right now based on the current situation. Oracle boasts an astounding $640 billion in total backlog RPO and generates over $32 billion in operational cash flow. They consistently beat consensus earnings expectations, beating 3 of the last 4 quarters, with $77 billion hitting their top line over the next 12 months alone. Oracle's cash machine makes this panic sell-off a prime structural entry. And if you really think about it, they could close the doors to all new customers with $638 billion in the pipeline over the next 5 to 10 years, and they could expand their $95 billion capex 4 times over and still have over $238 billion in the next 3 to 5 years in cash flow. This is pretty crazy when you think about it, considering how low the stock is right now. Before I reveal my top 2 stocks, including my absolute number 1 position, remember, identifying these structural floors on Oracle and Applied Digital is only half the battle. If you don't know how to properly execute using proper risk management and dark pool tracking, you will get caught on the wrong side of the trade. You don't want that to happen, right? That is why you need to be in my Masterclass webinar this Saturday, 2 p.m. Eastern. I'm going to teach you how to spot these exact setups before institutional breakouts happen. Seats are very limited. Click the link in the information box below. You do not want to miss this. I have a life-changing opportunity. 2 p.m. Eastern, 11 a.m. Pacific this Saturday, July 25th. I look forward to seeing you at the webinar. Link is in the information box below. Do not get left behind. The next stock that I've been adding consistently to my portfolio, now I'm adding even more, is Navitas, NVTS. This is a stock that has a lot of people concerned because of recent issues with the lawsuit and Wolf. But Navitas is the global leader in gallium nitride, GaN, and silicon carbide SiC power semiconductors. Now, traditional silicon chips are hitting a physical wall in heat efficiency. Navitas's GaN fast technology runs faster, handles higher voltages, and charges batteries twice as fast while running cooler. Ask me how I know. Right now, my red Raptor that's filming has gallium nitride power chargers that are designed by Navitas. And behind me, my cameras are on the charge with gallium nitride Navitas chargers. These things fly. They charge my phone, my cameras very quickly, and I understand what Navitas does, and it works. They are the essential power backbone for the AI data centers, EV fast charging, and next-gen hardware ecosystems. Now, on the chart, Navitas has completed a multi-month capitulation phase, and right now the structural floor is firmly locked between $11.50 and $12. Now, institutional volume indicators show massive accumulation quietly stacking in the order book at these levels, coiling the stock for a sharp reversal towards the $15 to $17 range. Analyst targets and guidance are still quite high because top Wall Street firms maintain a high conviction buy rating on Navitas, especially considering the price right now compared relative to where it was. The one-year price target on Navitas right now is between $25 and $28. 1 to 3 years is $28 to $35, and 3 to 5 years is $45 to $50 plus. There's a lot of growth on the table for Navitas, and right now it is a hiccup with this lawsuit. Nobody knows what's really going on because nothing has come out on the lawsuit, but history tells us everything we need to know when these lawsuits do hit the tape, usually what happens. Navitas holds a pristine debt-free balance sheet with over $232 million in net cash and $443 million in equity, giving them nearly $700 million in total financial runway. Though currently scaling towards profitability, the revenue backlog is expanding rapidly as next-gen AI server architectures demand their GaN technology. Now, like I've said before, there are some things that came out about the lawsuit and Navitas's response, and typically and historically when things like this happen, they usually end in settlement, and you have to think about the fact that Wolf has had many hiccups over the years. Now, this could just potentially potentially be a way to hold back and stifle Navitas because they can't keep up with the growth of Navitas, but we don't know for sure. But like I've said previously, I have a video coming out that'll be dedicating to Navitas and exactly what is going on here. Finally, we're going to be getting to my number one pick here on this list, Palantir, PLTR. Look, Palantir is the undisputed operating system of the modern corporate and defense world. Through their artificial intelligence platform, their AIP, Palantir enables commercial enterprise and government agencies to operationalize AI directly into their daily workflows. Now, their proprietary boot camps have turned into an unprecedented customer acquisition engine that legacy software companies simply cannot compete with. Now, technically, Palantir has shown unbelievable relative strength. After bouncing off deep macro pullbacks, Palantir has established an indestructible structural floor between 125 and 130. Every single time the price touches this area, smart money aggressively steps in to buy the dip. I'll be talking about this in my webinar this Saturday, tomorrow. You don't want to miss it. 2 p.m. Eastern, 11 a.m. Pacific. Link to register is below. Now, let's talk about the analyst targets and guidance on Palantir. Wall Street is continually revising Palantir's upward target. The 1-year target on Palantir is between $160 and $185. 1 to 3-year target is $230 to $240, and 3 to 5 years is $300 to $400. This is incredible growth. Palantir is a pure cash printing machine. They hold $7 billion in net cash with zero debt, an adjusted free cash flow trailing rate of $2.69 billion, and an astonishing Rule of 40 score exceeding 140%. Did you guys hear what I said? Zero debt, $7 billion in cash. That's insanity for a stock that's this cheap in its forward-looking guidance and forward PE ratio. Look, they've crushed earnings 4 out of 4 quarters over the past year. Palantir isn't just a stock, it's a generational asset that you don't want to miss out on. Fam, we are standing at a major crossroads. You can either sit on the sidelines as a passive spectator watching inflation erode your savings, or you could step up as an active participant and build true wealth. Applied Digital, Oracle, Navitas, and Palantir aren't just random stock tickers. They are fundamental engines driving the future economy. Remember, my golden rule, never allocate more than 5 to 10% of your portfolio in any one stock. Protect your capital, manage your risk, and trade with a plan, as there's no guarantees in the stock market. Make sure the stocks that I talk about in this video or any video fit your own personal goals and needs. And remember, I can't stress this enough, the market is volatile. There's no guarantees. Be safe, protect your money, and make sure to do your own due diligence. If you want my real-time entries, dark pool prints, and complete technical indicator suite, and also be sure to register for my Masterclass webinar tomorrow, July 25th, Saturday, 2 p.m. Eastern, 11 a.m. Pacific. The link's in the information box below. I will be going over all of these stocks and all of the charting and all the technical analysis on the stocks I talked about today, tomorrow at the webinar. You do not want to miss out on this. I have a huge life-changing opportunity, and I'll be hanging out with you and answering your questions on the stocks that you need answers on. I'll be there for you, answering your questions and hanging out with you. You guys don't want to miss it. Smash the like button, subscribe if you haven't already. I look forward to seeing you guys in the webinar and in the Discord real soon. Be sure to subscribe, smash the like button, and give me a hype on this video. If you guys enjoyed it, drop a comment below. Let me know which of these stocks that interest you the most that I talked about today, or the stocks that you actively have in your portfolio. I'm Corey. This is Invest with Corey. Take care of yourselves. Stay safe out there. One love, fam. I'll see you tomorrow at the webinar and on the next video and the Discord real soon. Let's go.